Hey, what's up, guys? Josiah here with EasyCaters.com, and this morning I just wanted to do a little bit different of a video. Wanted to talk about multiple time frame analysis and why I use that in my trading. Um, so by now, if you've been watching my videos, you can see that I keep multiple charts up in front of me at all times, with each with a different time frame. So here I've got a quarterly, a monthly, a weekly, and a daily, um, all for the same symbol. And so some people might think that's a little odd. And so I thought I'd go over some reasons why I use multiple time frame analysis. Um, Now, there are a lot of traders out there. I think when we first start trading, a lot of times we think, okay, we're just going to be, if I'm trading Apple, then I'm just going to keep a chart up of Apple. If I'm day trading, I'll keep it on a 5 minute. If I'm, swing trading, maybe I'll only look at the daily chart, that kind of thing. So that's typically the way we start trading. But there are people out there that teach multiple time frame analysis or use it in their own trading, but a lot of times you'll find that they only use maybe 2 or 3 or 4 time frames maximum at a time. And you'll see in my day trading, I actually usually keep I guess 7 different time frames up in front of me at all times. And so that's a little bit different. So why would I do that? Well, um, kind of one of the fundamentals about price action is that it is fractal in nature. And the the reason for that is that it's just reflecting human behavior. Um, the smaller time frames are reflecting the behaviors of fewer traders, and the larger time frames are reflecting the behaviors of larger numbers of traders, and especially the longer term traders that are affecting the overall secular trends and so forth. So, but price action is human generated. Uh, you know, it's just human emotions and decisions and so forth being, um, having its effect on price patterns and so forth. So, it's the same across the board. It's fractal. You see the same types of setups on a 5 minute that you do on a quarterly chart. The same types of patterns happen again and again. You can see a 1, 2, 3 type of trend continuation setup here on the quarterly. It's exactly the same kind of thing you see on a 1 minute or a 5 minute chart day trading. So the same types of things happen again and again. Now, as a price action trader, which I know a lot of you aren't trading that way. Some of you have systems that you trade. Some of you take signals from uh, several indicators or look for a combination of multiple indicator signals. And these all kind of systematize those price action signals in a way that makes it easier to make decisions. And so that there's value in that. But again, I think it's all driven by the same type of movements and the same types of signals, no matter what time frame you're on. Um, but but in any case, as a price action trader, which is what I do, I look at price and volume and just kind of I have a few indicators to help me do that. Um, it makes sense for me to be taking trades in on the smaller time frame. Say taking a 5 minute entry or a 10 minute entry in the context of a larger, maybe 30 minute trend, so that when if I choose my entry correctly, then the movement will be much easier, much more fluid, and the price will move farther um, than it would if I were just taking a one-off, 5 minute entry. So it makes trading the smaller time frames easier if I get into a trend on a larger time frame chart. So that is the kind of the idea behind keeping, I keep my 30 and 20 and 15 up here, and then I try to find my entries on the 5 and 10. And sometimes I take an entry on the 15 or something like that. but that's generally, I'm kind of more of a short-term trader right now, and so I like to look at the slightly longer time frames like the 30s, the hourly, and so forth, and um, and then find my entries down here on the smaller time frame and get into that larger trend, but with a tighter stop, um, better risk to reward parameters, and so forth. So that's the idea there. Now, so that's one reason to look at multiple time frames. Um, so the other reason is that traders and market participants can hide information in the data aggregation. So data aggregation just means, so each one of these monthly bars is aggregating all the trades, all the share volume, and so forth for that month, and lumping it all together and giving us a bar and a volume um, histogram based on that. So um, a lot of data is being lumped together, and that's good. It makes it easy to compare, each bar to the subsequent and the prior bars, so that we can kind of see where we are in the overall trend and so forth. So it helps us compare across bars, but sometimes bars are not um, ideal to be compared together. So signals can be hidden inside of a bar that are important for you to see. So that's another reason to keep these multiple time frames open. So you can see here as an example of that, on this monthly chart, I have we have a long sell-off, and a long sell-off on one chart is simply like maybe on the yearly chart, this probably just looks like one red candle. So again, the same signals are happening again and again on the same on all the different time frames. So this deep pullback here, it was probably a very deep pullback on the weekly chart. You can see it here, but that was just a 1, 2, 3 on the quarterly time frame. So all these signals that they look confusing if you're just looking at one time frame. If you zoom out, a lot of times things become a lot more clear. But anyway, as I was saying, we have this long pullback here, which is probably a pullback or a one red bar on the yearly time frame. And then we put in a volume signal down here, bounce up, volume signal marks the high of this range that's developing. We're retesting this level here as supply. Come back down to the bottom of the range, volume comes in to absorb the selling. Then we bounce back up, but we don't have really much of a volume signal up here. Well, this is where aggregation of the data gets tricky and gets confusing and hides or obscures data that's important to be looking at. So we don't know if we're starting a new uptrend or what's going on here. Some people thought this was a new uptrend, and you can see we had a breakout above this high, but then we immediately reversed back down. So it would have been helpful at that point to know that there was a big volume churn signal right there at the top on the of that breakout, high volume churn happening, saying, okay, this is meeting resistance. There is a lot of volume being traded, but not much movement. And so then we get this reversal back down. So we have a volume signal here at the top of this range, even though you can't see it on the time frame that you might have been trading it on. And so that's another reason to use multiple time frames to kind of split these bars open, maybe kind of like using X-ray vision or something to peer down inside of the bar and see where the volume is happening, see what types of signals went together or what types of price action signals went together to form the higher time frame bar that can sometimes obscure that information. So that's kind of a good example there of volume being hidden, and so splitting it out into multiple time frames can allow you to peer inside that bar and see those signals. And then we've got the volume signals kind of resume here and show you more of what's going on. Maybe there was a volume signal right here. Maybe we need to zoom down here and see if this one could have been found using multiple time frame analysis. And you can kind of see here, the volume churn marked the breakdown area right there. We started trying to go up. A lot of effort was expended to go back up, and it failed. And so that's what I like to see. I usually trade these on the long side where we start having a lot of effort expended to go down, and then it fails and it goes upward. This one is an example of a lot of effort being expended to go upward, but then we fail and go downward. So that's a good example of that, where these volume signals are being obscured. You can peer down inside of a smaller time frame to get those signals instead. So hopefully this has been helpful. This is a little bit foreign to some people, I think. And so I wanted to go over some ideas here. I think I take a lot for granted. As traders, we all learn to trade in a certain way. And so I kind of, live in my own little bubble here and assume everybody kind of knows what I'm talking about when I talk about different signals, like the 1, 2, 3 setups and so forth. I had somebody ask a question about. So I thought I'd just talk about why I do that and kind of give a little bit better idea about how I trade and so forth. And hopefully that's valuable to you guys. If you have any questions, leave me a comment below. If you enjoyed this video, please give me a thumbs up and a subscribe. And we will talk to you soon. Thanks.